All right, let's get down to it. Hi there, everybody. I'm back from vacation. It's good to see you all. I am Mark Sebastian, your only option. This is the weekly Option Pit Ticker Show. I am joined by Andrew T. Giovinazzi, the Oracle of Options, and of course, the Duchess of Doge, the Queen of the Candles, Leisha J. Leslie. And this week we're talking about GE, General Electric, and with a little kiss, a smattering of SMR, small scale nuclear reactors. Should be a fun one. Let's I just want to kind of talk about I want to start with GE, and I want to talk about the long term on GE. So not like, I want to put things in perspective. When people say, look at the run it's had, and look at the run it's had, right? It's had on the year, it has gone from 90 to 170, which sounds like, holy cow, how could GE do so well? All right, well, I'm going to stretch this out. I'm going to go to GE. And what I'm going to do is actually pull up a month, a weekly chart, and I want to give you about 20 years should be plenty. And GE is still below where it was in 2016, and split adjusted, it traded a high of 260. And if I go back further, I don't know what the max available is. Yeah, but going back, this thing in 2002, this thing was over 300, as I recall, split adjusted. It was incredibly expensive. So it's had this incredible run, but it's really just kind of gotten back to where it was. I'm not going to make a judgment on the near-term overbought or oversoldness, but this is a company that, on a long term could absolutely continue to rally from an investment standpoint. But from a trading standpoint, it's had a really nice run. SMR, kind of a different story. This was a stock that went public in 2020, hit its high in 2021 with all the memes, and just basically went straight down. It's now trading $10. It's just gone straight up over the last 4 days. And, its upside was about 15. Near term, you would think somewhere like that. But, there's a little less history here. This is more of an IPO style stock. So the key is take money off as I'm trading it, right? When Frank suggested this one to me, I went across about 5 different accounts and bought almost 10,000 shares. My average price is probably about $280. But I sold some at 5.5. I sold some at 8. I'm selling some today at 10. But I'm never going to go completely flat on this one because I now am into my stock at such a big credit that I can just kind of sit back and relax with what I have left and know that I can ride this one out. Because if this is the beginning of a major move, the beginning of something, then I want to allow this thing to cook. And, I'll probably sell a little more stock around 15 is where I'm sitting. That's kind of the two investment theses that I want to go through. I've not really, obviously I was out last week, so I haven't had a ton of time to dig in the financials. What I do know is SMR is very much a kind of what's in the future type of company, not a what are we currently making. But just looking at current PE and forward PE, if we're in a period of PE expansion, and we are, then there is upside to about 20% upside to GE. before, that PE would expand to something that for an industrial would seem aggressive. And that's my take on what I'm seeing in GE and SMR. So with that, I will pass the ball to one Alicia J. Leslie to break down what she sees in the charts.
And let me share my screen.
Yeah, Frank still likes AVAV, William.
I am seeing in GE, it's well above my latest pitchfork there, and I will update with a new pitchfork. But just going back, as Mark did, going back to the history and grabbing some trend lines that way, I believe GE is bull flagging here. It's a nice consolidation. It did trade and rolled off that resistance level, so we know that's resistance there, like 175.40. And now it's consolidating. I believe it's consolidating to try to pop up over there, over that resistance at over 175. And then beyond there, we have 192.40. So yeah, I'd say GE looks like it wants to trade 200. I do have support down here coming in at, which you can use as your stop loss down there. 170. Nice round number, 170 makes sense. That's what I have. Should I do SMR? You want to do a trade?
Let's do SMR. There's a rather large downtrend on AVAV, AG, put time AV. That's for another topic, Jose. I don't want to throw out too much stuff. People are asking questions. We're trying to stay on point here, everybody.
SMR, same idea, going back in history. This stock has been as high as almost 17 back here in August of 22. Through my trend lines going back in history. When you have a parabolic move like this, right? Kind of scary, crazy. Do you hop in? Do you not hop in? I think you can. Well, you for sure can use this gap. Will be support. The whole gap area is support from 864 down to. I already have this in there. $8. That's support. I'm thinking in the next step's 1132 in here.
So right now in the August cycle, Alicia, there's $2 of hard to borrow cost.
Oh, wow.
20% of the stock annualized. So the hard to borrow right now is 240% in there.
Wow.
Well, if they get one, according to Frank, they get one if they get one reactor green lit, the stock is off to the races.
I should loan my stock out.
Huh?
I'll loan my stock out.
I rolled up to calls in here. I think this one is like, I feel like we should do like a call. I could do the vol analysis here for people if they want. Let's just take a quick look. Because when I did my piece, I only did one stock. I didn't do both.
All right. Well, that leads us to the next part. Andrew's vol analysis. Andrew weekly gives us vol analysis. Then he's going to maybe give us a trade, and I'll tell you whether I like it, and maybe I'll come up with something simpler. So with that, I will pass you off.
Yeah, because I'm sitting on a couple trades I do not.
The Vicar of Volatility.
Yes.
I think I like the Vicar of Volatility better than the Oracle of Options. Which one do you prefer?
The Vicar of Volatility.
Yes.
So Susan says, Alicia, when you see a gap of support versus something that needs to be filled?
Both.
Susan,
a lot of times it will come
both.
back and fill it and then keep going in the same direction. But it's definitely that whole area of the gap is either support or resistance.
So let's start with GE. So as a point of reference, the Viceroy of all, the Vicar of all. people that knew me when I was younger would laugh at that, by the way. MS, you'll definitely come up with something similar. Well, blah, blah, blah to you, Susan. All right. So I would say GE is kind of, I don't know, holding pattern, but volatility relatively high. Vol song is not until trading desk, so you got to wait for that. It's got a few minutes to go. So we got April 23 earnings. But again, you can see all these vols here are relatively high, and realized vol is a little lower overall. So basically what's happening is, this volatility story is telling you the story. What I mean by that is the underlying is just kind of cruising downward, but the stock is moving kind of straight up. And I think it's kind of peaked. What I would look at is maybe some kind of credit spread, put credit spread, iron condor, something like that for the April cycle. Because it appears, anyway, that GE is doing fairly well. But vol's here a little higher, something to get that would leave that you would exit prior to earnings. So let's see if there's actually anything good here. Anyway, so I would think of something like this, like a little put credit spread here. Or we could do 1x2 spread, with a little broken wing fly, something to generate some income. Will the split off of GE Verona on 4-second affect the trend? I mean, maybe Joe O. My point is, I would not really work anything near the money. I would work away from the money because the volatility is relatively high. So I would be more like on the put kind of credit spread thing with this, or 1x2 put spread. So let's see here, 160. Like I could see doing a 60-50. Let's see here, before earnings. Oh, maybe we could do this sooner. Hold on. Because these options are kind of relatively expensive down here. Let's see here what I can get. So 60, something around here for small dollars. How about a covered call? I mean, you could do a covered call is not my favorite thing to do after the stock is up $50 in a month, William. It's just not if you own the stock, maybe, but it's not my favorite. I would consider a calendar, a diagonal spread too. I'm pricing that. We could do a relatively short duration one here. That would be very aggressive. The Viking of vol. Let's see here. If we could do, what's this? If I'm looking at what's this, 65? Let's see here. So we could do the 65.70 for... it doesn't look that great. April 12, March 28. What I'm trying to do is just see if we can get a little bit of premium coming in. The 65.70 here. That would be $3 on your spread. The Vanessa White of vol. Thank you, William. Who's Vanessa White? Anyway,
I know Vanessa Williams.
I know Vanessa Williams, and who's Vanna White? It's Vanna White of vol, William. If you're thinking, so anyway, I would go on the order of some kind of credit trade, either diagonal put spread, maybe diagonal put spread below the market, 1x2 put spread, something along those lines. Just because it's kind of like it's stalling a little bit and the vol's relatively high. SMR, the volatility is so high and the stock is so hard to borrow. It's like a one-way freight train. The borrow rate on it looks like about 200% a year short. So they're going to charge you 200% of the value of the stock a year to short the stock right now. So you could blink and this thing could be $15 tomorrow. You make it too complicated. Well, you know what though, Tracy? I make a lot of money. That's the deal. It's not that complicated. So I just do what I do. Here, I would say really the only thing you're looking at is just buying calls. That's your choice. So like at this point, the stock could be anywhere, literally anywhere. You could buy like the 7/8 strangle, this like, the 6/12 strangle. Because if you blink, the stock could be up another $3 tomorrow. And to be quite honest, 100 volatility relative is not that high because the stock is moving 26% a day. Like I would say, Jose, because the puts aren't going to go anywhere when the stock is hard to borrow. But I would go like 100 volatility way out here these are not very expensive options relative. I'm just saying the stock is up 26% today. That's like a 350 volatility. How much is that? Mark, so do you have a trade idea? I would just do a calendar diagonal and GE, and I would take some of the proceeds from that and buy a strangle in here.
So in GE, I like your diagonal idea with a put, or like something like that. I like puts in stock with GE a little bit. But
that's not a bad one either. We have earnings coming out, Mark.
I know. I would look.
I feel like you want to be long, but I don't want to buy stuff at the money.
Yeah, I like your idea, like the April regular. So we're not dealing with earnings. The earnings are the 23rd. You buy the April regular 175 call for $3.75. Sell the March 28th 175 call at $1.30.
Oh, okay.
And then continue to just a straight calendar, and then continue to roll options forward on that.
So like on the April 175, March 28 175.
Yeah.
Okay.
I like that, and you could hedge it with a put if you want. Like buy 3 of those, and then buy like one April 165 put or something like that to hedge your downside. Because the one thing that worries me about GE is if there is some selling, it could be violent.
All right. And well, you could blink and it's 160, right?
Yeah.
So I totally get that.
That would be my trade. Okay. If you want to go simple, then I would buy the 175, 185 call spread for less than 250.
Okay. All right. So we got some ideas then. Hold on here. Let me see here. So we've got I think the August timeframe for SMR is underpriced personally. Like the stock is up to what, Mark? What is this? If a stock's up 30% in one day, what's the vol there? Like 360 vol?
Yeah, it's pretty high.
You just buy a strangle. Buy the 12-7 strangle or 12-6 strangle for $225. Because it's an insane borrow. All right, 18. If you don't know what I'm talking about, say I don't know what you're talking about. But here's our GE trade. It'll be relatively simple. So the simple one is just your time spread. So let's go simple with everybody because we'll just go simple. We'll buy buy one GE April 19, March 28. Call calendar. You want to pick it up for what? $2?
Yeah. Less than 250.
Call calendar for less than $2.50. And then for your little juice idea,
it's just long the 175, 185 call spread for 250, less than 250.
Yeah, Randy's saying SMR income play, selling the 6 put for 33 cents. This is the 175 call calendar. And we'll get this out on the app for Christian. This is the 175. Can you guys see my screen? And then SMR, again, very volatile stock. I just like the April cycle, like the August cycle. Sorry, the August. I'm already long some calls in here. I had kind of did a house money roll, so I'm just telling you the same thing I have. And this is August. SMR. August 16. Again, up to you how you would want to trade it. But I would say you buy the calls, use the GE trade because the GE trade should provide positive decay. So you could just do the GE call calendar and buy an SMR call and see how the cookie shakes out. That would be the simplest way where you have theta positive style trade. And then here. So SMR like the August. Okay, I just went in here. August 16, 12 calls for up to $1.20. All right. Yeah, if you want an income trade, again, the puts aren't going to go very far until after the hard to borrow is over.
Right.
And I got to go to on GE.
Yep.
So you're buying the April, selling the March.
Yes.
You're buying the April 19 175 call, and then you're selling the March 28 175 call.
And you can hedge with a 165 put if you want.
It is not a credit in the call calendar. It is not a credit. This is a debit. 250 debit top. I would say your put strike for GE if you wanted a hedge would be lower. I got to go, guys. I got to do a trading desk.
All right.
But you're down here. I would go down low, right? Like a 155 put.
Yeah, or once, somewhere less than $3. You could buy the 65, 55 put spread, something like that. Something that'll pay.
62.5. I wouldn't go any higher than that.
Yeah, I like it. All right, everybody. Andrew, if you want to unshare, I'll close things up.
Yep. I will.
I want to thank everybody for being here. This was the Option Pit Ticker Show. Again, we hope you were able to gather some really valuable information here. I am Mark Sebastian. I am your only option. So for the Viking of Volatility and Andrew and the Queen of the Candles, Alicia J. Leslie, I'm Mark Sebastian. I am your only option. I hope you have a great trading week.